The broadcast is now starting. All attendees are in listen-only mode.
All right, now everyone, welcome to the weekly webinar. This is Neil Green again with you, just like every week. Welcome you guys joining us from GoToWebinar through our website, and I would like to welcome you guys joining us on Facebook.com, on our homepage at itrader.com. All right, just want to do a technical check, see that everybody can see the screen and hear my voice. You guys on GoToWebinar, you have a chat window. So if you have any questions during the webinar, at the end of the webinar, you're more than welcome to write me down. I'll try to answer all your questions in between. Right, all of you, don't do it at once. Just take it one by one. Usually, okay. So everybody can see the screen. Okay, you guys on Facebook, by the way, if you want to join us next time through GoToWebinar, it's free. It's much easier. Okay, all you have to do is you have to go to our homepage at itrader.com. Okay, see, this is the homepage. You have actually two options. Okay, one of them is the go down here. See, you have join our webinar. Okay, click on save me a seat. You have to put in your first name, last name, and your email address. Okay, of course it's for free, and you can go through, I think, now there you go, news, webinars, and so on. So we've been doing it, we do it now once a week, talking about the events of the same week. And today we're going to talk about the biggest event in the market that is going to take place tomorrow. Everybody knows it's the interest rate decision in the United States of America. Okay. the biggest event of the market, influenced the market strongly. And let's see what happened in history. Let's talk about interest rate in general. Let's see what it affects, what possibilities it gives us, and so on. So, if you're ready, let's start. Okay. So, the Fed rate decision. Now, big Federal Reserve event will be this Wednesday, which is tomorrow. Today is Tuesday, tomorrow is Wednesday. This is how it works. Okay, so tomorrow we have the Fed interest rate decision, actual rate decision, and statement at 6 p.m. GMT time. So make sure you know what it is at your time. Okay, London time, for example, it's 7 p.m. If you're from Central Europe, it might be 8 p.m. in the evening. Okay, if you're Eastern than that, it might be 9. So pay attention. We're talking about 6 p.m. GMT time is going to take place. The the Fed interest rate decision. Okay. A press conference is going to be by Janet Yellen. She's the head of the Fed. It's going to take place 30 minutes after that at 6:30 GMT time. Just for you to know, we have 8 interest rate decisions here in the United States of America, the strongest economy in the world. 8 interest rate decisions, which means 1 month we don't have it, and then 2 months we have it in a row. Now, 4 of them, okay, half of these interest rate decisions, is followed by a press conference 30 minutes after the rate decision, which means we know what is the interest rate, okay, and then 30 minutes after that, the head of the Fed, which right now is Janet Yellen for the past few years, she's gonna talk about the reason why they decided, to raise interest rate, to make it lower, leave it the same way. She's gonna talk about it. She's gonna answer some questions. So it's gonna be a whole hour, okay, of the press conference that really matters because, for example, what we expect tomorrow, interest rate in the United States right now is 1.25%. We expect it to stay the same, okay, at 1.25. Now, let's talk about it. Before everything, let me show you. Okay, both of these events could have opposite effects on the US dollar, okay, which means the rate decision and the press conference. So there's a 30 minutes difference. Then we see the rate decision and the press conference. Now, both of these events could have opposite effect on the US dollar. I'm going to talk about it in just a second. But the reaction by the dollar could be strong. Now, let me try to explain. As we said, we have 8 interest rate decisions. At the beginning of the year, okay, in the past, if you go here, you can check on investing.com or Forex Factory. Take a look. You have the federal funds rate. You see? Okay, the previous right now the interest rate in the United States is 1.25%, as we said, and the forecast is 1.25 for tomorrow. Okay, taking a look at the history of it, there you go. Okay, you can see that the interest rate in the United States was on 0.25% for years since 2008. Okay, since the big crisis, 0.25% and stayed the same for years. The first time interest rate in the United States, okay, when the market got a boost, when it started to go up, it was on December 16th of 2015. It was the first time that interest rate went up from 0.25% to 0.5%, okay? So we're talking about almost 2 years ago, after, what is it, 9 years, or 8 years, the interest rate stayed the same. A year after, on December of 2016, as you can see here, interest rate went up for the second time from 0.5% to 0.75%. Okay. Now this year, the beginning of the year, the Fed talked about if the stock market is gonna go up just like it went before, they were talking about 3 hikes. At the beginning of the year, we had 2 so far. It didn't happen in 11 years. Okay, you have to understand we're in a new world. Okay, what's going on in the market right now? The market is at the highest point ever. Let me show you. If you go to the MetaTrader, okay, taking a look at the market, look at this. Look at all the main indices. I'm going down here to the indices, US indices. And let's take a look at, for example, Nasdaq, Dow Jones, doesn't matter. Take a look at the Dow Jones on a monthly chart, which means that each candle that you see here represent 1 month. You can see that the stock market is the highest point ever. We're talking about 22,300 and something points. Okay, it's never been so high. This year we crossed the 20,000 after Trump was elected. Everybody talked about it. The market is at the highest point ever. You can see every month is getting higher. US stocks are going higher, and this is the reason why the Fed can raise interest rate. And let me explain. When interest rate goes up, okay, let's assume that I have $100,000 in the bank. All right, I have $100,000 in the bank, and I don't know what to do with it. Where should I invest? Now, if interest rate goes up, okay, think about it. Most of the people would put the money in savings in the bank to get more interest for the money, non-risk, right? Makes sense. The bank pays you more for your money. Interest is higher, non-risk. You put it in the bank, but you have to get the money from somewhere. So you sell your stocks, okay, and you put it. You sell your stocks and you put it in the bank. So U.S. bank stocks are getting higher usually when interest rate goes up. The US dollar is getting stronger, okay, because money comes from the outside and buy dollars. So US dollar is getting stronger. And US stock market is getting weaker. Now, when the US stock market is so strong as we can see right now, okay, this will be a great opportunity for us to lower for a hike. Okay, this is a great opportunity for the Fed to raise the interest rate when the U.S. market is so strong, because it's not going to harm, hopefully, the stock market. Okay. By the way, usually when the U.S. dollar goes up, gold goes down. They work in an opposite correlation, and we're going to talk about it in just a second. So okay, so we have the rate decision statement at 6 p.m. GMT time, and then 30 minutes after that we have Janet Yellen press conference. Go on Bloomberg Live or wherever. I want you to listen to Janet Yellen, and right now I'm going to give you the points. I'm going to give you the issues that I want you to pay attention to, okay, during the press conference. If you want to trade, there's going to be a lot of volume, a lot of money coming in, a lot of volatility. The market is going to go crazy, which means a lot of trading opportunities for us. What should we do? Let's take a look. Two main questions during this event. First question, will the Fed raise the interest rate again this year? Okay, so tomorrow interest rate is supposed to stay 1.25%. Just to remind you, at the beginning of the year, they said 3 hikes. We had 2 so far, from 0.25 to 1% and from 1% to 1.25%. We have 2 more interest rate after this one decisions. One of them is followed by a press conference in December. Now, just to remind you, the two of the 3 last hikes took place on December 2015 first time, and then December of 2016. Let's see what's gonna happen on December 2017. Will the Fed raise the interest rate this year? The rate will not change on Wednesday, but could, as I told you, raise in September. Okay, we just said it. So we want to listen to Janet Yellen. Now, think about it. If the Fed expects, okay, is going to say that the market is going to stay the same way, that interest rate will be higher on this December, that we expect another hike, okay, this should be supportive for the US dollar, okay, negative for gold and for the US market. Of course, it's going to be good for US banks because interest rate goes up, all right, the banks are making more money out of their loans. So, okay, put it aside. The second question is, will the Fed reverse its money printing program? Now, this is a crucial move by the Fed and could be addressed on press conference. She's going to be asked, okay, Janet Yellen, pay attention, about the money printing. They're printing 50 to 70 billion dollars a month, okay, the US. If they're going to stop it, let's talk about what's going to happen. What does it mean, reverse money printing? When the Fed prints money, okay, which means they print US dollar for the public, supply goes up and the value drops, all right? Think about it. When we have a lot of supply out of something, the price goes down, right? When we have a lot of demand, the price goes up. This is how it works. When we have more buyers, more demand for an asset, the price of the asset goes up. And when we have more, think about, you want to buy a t-shirt, okay? A specific t-shirt. Now, if you have only 3 t-shirts, okay, in the whole state or whole country, and a lot of demand, what will happen to the price? Is going to go up. But if we have thousands of the same t-shirt, or millions of the same t-shirt, okay, so the price will be low. Same thing with currencies. When the Fed prints US dollars, a lot of US dollars, okay, means the value of the dollar drops. Okay, if they're going to reverse the printing, okay, and since 2008, as you can see, the Fed printed around $3 trillion. We're talking about $50 to $60 billion a month, all right? Now it wants part of the money back. They're going to buy the bonds out of the public meaning reverse supply of the money. Okay, this will be the first time in history that it happens, if it will happen. Okay, if they're gonna stop printing money, what do you think will happen to the US dollar, guys? Any guesses? Right, exactly. Okay, if they're gonna stop printing money, we expect the value to go up, because if we have less from something, okay, less money printed in the market, the value is supposed to go up. And I want you to listen to the press conference after the interest rate decision, see what Janet Yellen says about it and what she says. So we want to listen to two things. Okay, we expect interest rate tomorrow to stay at 1.25%, and we want to pay attention to two things. One, what she's going to say about December. Okay, are we expecting another hike? Okay, what will be the terms for another hike on this coming December? Another thing. The second question is about reversing money printing. Right now, the Fed prints a lot of money, $3 trillion since the big crisis in 2008. They're going to stop printing money because of the situation in the market right now. If they're going to do that, it's going to be very supportive for US dollar, very negative for gold, and the opposite. When supply drops, the value of money rises, okay? Similar to rate hike. When interest rate goes up, okay, the currency is getting stronger. When we cut supply, when we stop printing money, the value of the money goes up, right? Rises. Great. But will the market fully understand the move on Wednesday? Now, market volatility could rise during the press conference. Not could, I say will, okay? You're going to see a lot of movement, a lot of volatility, a lot of money coming in the market tomorrow. I want you to pay attention to this. Now, major indices like the Dow Jones and S&P could be under pressure during Yellen's speech. Now, just for you to understand, if we expect another hike, if we expect, okay, reverse in money printing, US dollar should get stronger, and we expect the stock market to get weaker. As we said 3-4 minutes ago, maybe it was more, um, if interest rate goes up, currency is getting stronger, which means people are putting their money in savings in the bank and take it off the stock market. If interest rate stays the same, if we're going to have only 2 hikes this year, okay, after we expected for 3, and if they're going to keep printing money, US dollar should get weaker, and then we expect the market, actually, the US stock market, to get stronger. Dow Jones represents the 30 stocks, the 30 biggest corporations in the United States. S&P 500, as you can guess from the name, represents the 500 leading stocks. You can trade on Nasdaq 100 and so on. Trading tactics. Okay, let's talk about it. I want you to take a pen and a paper and write a few points that you want to pay attention. Again, tomorrow, 6 p.m. GMT time, interest rate decision. 30 minutes after that, Yellen is going to speak on the press conference. Okay, we have the points. We have the 2 major questions. Now, traders could trade the 6 p.m. and 6:30 GMT p.m. events separately. We even might, listen, it's not going to be a big surprise if you're going to take a look at the US dollar, if you're going to see it drops and then goes up. Just giving you an example, all right? If interest rate stays the same, okay, it might drop because we expected 3 hikes, we had only 2, okay, it's not good for the dollar. But then 30 minutes after, if Janet Yellen said they're going to reverse money printing, we expect the US dollar to get stronger. So you can trade it separately. You can trade on for 30 minutes and then open some new trades after that. Meaning open and close positions before Yellen starts talking at 6:30 GMT. Okay, you can open and close your positions before the speech and then after. Now, the focus at the press conference should be downside pressure on markets because of uncertainty. Okay, so you have a big deal here. Take a look at this. The focus on the press conference should be downside pressure on markets because of uncertainty. Nobody knows what's going on really right now, and we're expecting tomorrow. But if reverse action is published, markets could receive strong support, as we said. Okay, so pay attention to this on the press conference. And of course, good luck. Any question, guys? Anything you didn't understand, you would like me to clarify, this is the time. Okay, so guys, you can email me during the week. What I'd like you to do, okay, next time, if you want to join our webinars, just try to do it through the website, okay, through itrader.com. Log in, and then we can contact you back. You guys on Facebook, welcome, and hopefully you join us. I'm going to be here next Tuesday talking about the next topic. I would like to thank you very much for participating today. It was my pleasure, and hopefully you'll trade smart. And see you next time, guys. All right. So thank you very much. Bye bye.